Good morning, everybody. Happy Wednesday, hump day, also FOMC day. Jerome Powell is going to be speaking at 2:30 today. If y'all want me to cover that, make sure to leave a like on the video. And we're also going to get the summary of economic projections, where the Fed is going to give their estimates for where interest rates are going to be by the end of the year, where GDP is going to be by the end of the year, and also where inflation is going to be by the end of the year as a measure of core PCE. So we're going to get those few things. It's not only the next year, but also the long term. So up to like 5 years out is what we're going to get. The last summary of economic projections you can find on the FOMC calendar. From 2022, if you scroll all the way down to December, the projection materials is what you're looking for, the PDF. And this is what we're going to be looking at 2 o'clock today. So the last time that they reported this back in December, they expect the federal funds rate to be 5.1% by the end of this year based on the median. The central tendency is 5.1 to 5.4, and then the range is 4.9 to 5.6. So this is where the dot plot comes into play. So for 2023, this is where they expected rates to be last time. So they're going to give an update of this dot plot, and if they maintain the same assessment where rates need to go that high or go even higher possibly, then we could see some pain in the stock market after this release at 2 p.m. Currently, the 10-year is up again today at 3.615. So basically trading at yesterday's highs. It was all the way up to 3.64, but it has pulled back. I would expect rates to really start to go up a lot after this, if my hypothesis is correct, if they do keep those higher interest rates. So I think the best trades to take on this would be either puts for TLT, so assuming that TLT will come down, or puts for gold, because whenever rates go up, the dollar goes up, and gold would come down. So either of those two would be a good trade, I believe. I think gold would probably pull back to, my guess would be like 175 for GLD. Conservatively, I would say 178 within the next couple of weeks. So I think that's probably the trade that I'll make this morning. And then you could also do TLT. TLT has already pulled back a good bit from 108 down to 104.67 right now. So there's less opportunity in that, I feel like, than there is for gold, since it's already down like 4%, 5% from the highs. Gold, on the other hand, is still, up there. I think it fell $4 on top of 180. So that's only, 4 over 180 is only 2% down from its highs versus TLT down 4%. So I think gold is probably the better opportunity for the downside. Happy hump day to you all. Happy hump day, Peter. GameStop just saved my portfolio. Do I feel like NVIDIA is too overbought? Yes, absolutely. I think that NVIDIA is probably the priciest stock in the market right now. Probably not like the priciest. There's somewhere in the market that the price to earnings ratio is probably worse. But NVIDIA, I feel like, is a very overcrowded trade. I feel like people just are assigning it an infinite price to earnings ratio, and I can't really justify that whenever rates are bound to continue to go up and stay up. It just doesn't make sense for valuations to be as high as they are for NVIDIA right now. Good morning, Kamala. Good morning, Al-Qaeda's. Good morning, Peter. Good morning, everybody. We have a 55% or 52% saying that today is going to be a red day. We got 21 votes and 8 likes. I know y'all are seeing this, so like the video. But yeah, gold I think is probably the best opportunity this morning. So I am going to take downside trade for the next 2 weeks, assuming that interest rates are going to go higher. So GLD. And on top of the U.S. looking for solutions to backstop all of the deposits, I feel like that just kind of compiles onto the higher interest rates, and that should bring it down. But it does look like we got rejected around 400 for SPY, which is what I was expecting yesterday. I didn't think that we could go above 400 before the Fed, and that seems to have been the case. But looking at this put debit spread for March 31st for GLD, let's see. We're paying 38 cents at the ask price, 30 cents at the bid. So I'm going to have to get a better bid-ask spread from Aries instead. Need help getting away from the meme stocks. I was never into meme stocks personally. I just feel like they're too volatile to trade options on. Oh, what the heck? I don't have any funds in this account apparently. That's strange. Oh, this is a futures account. I was about to say what happened to my $1,000, but still have it. So going to GLD options, March 31st expiration, and assuming it's going to fall to 178, we'd buy the 179, sell the 178, and this one's going for 34. If I go one strike price higher, I wonder how much it's going for. If I assume it's going to go to 179 instead of 178, paying 41 cents. So that makes the trade a little bit more likely. Gold doesn't tend to make, huge moves up and down, but we have been seeing a shit ton of gaps in the chart ever since the banking crisis started a couple weeks ago, back on, let's see what day, back on the 10th of March. So I think probably it's coming back to 178, maybe coming down to fill this gap right here. So let's see. These are going for 35. And I think I'd be willing to put down probably 300 for the trade. Maybe 350. So my break even is 178.65. So assuming that rates are going to go higher, this trade should work out. And that trade did not get filled for 350. Gotta love Robinhood and their bid ask. Hi, Donald. All right. I think I'm going to have to replace the order for 36, and I'm going to reduce by 1. Whoopsies. Keeping the same expiration. .36. I'll actually reduce by 2 instead of 1. Gotta get them GME. All right. So this will be a swing trade. Well, maybe. Debatable whether it'll be a swing or a day trade depending on how quickly it moves. But just bought a GLD, put debit spread. That's expiring for 331, and I got them at 36 each. Probably overpaid for them with Robinhood. Wouldn't be too surprised. The strike prices, I'm assuming it's going to go below 178. We got 33 votes and 19 likes. That's actually a pretty decent ratio. But yeah, let's see. SPY currently trading for $398.56, down a whopping 0.1%. So not really moving much. The VIX is down to $20.83, down by 2.4%. So since SPY really isn't down that much, VIX is going to continue to come down with that. IWM is leading the way down. So this is risk on, risk off. So today is starting the day off risk off with IWM down 0.5%, coming off of the highs of yesterday. And the pre-market, looking at the 20-day chart, coming below the 200 moving average. So this could signal the start to a sell-off. It's below 50 RSI. MACD is sliding down, but not in the negative yet. But it's really going to depend on how the Fed comes out today, if they're more hawkish than expected. So again, the main thing to look at is not going to be 0 or 25 basis points. We already know that like a 99% chance that we're going to get 25 basis points. If you look at the Fed futures, the Fed always follows this. And it's saying that there is a 88% chance that the Fed is going to do 25 basis points. So basically, they're going to follow this to the T. If they do end up going with pausing rates, I think that the markets would probably panic. I think that that would be signs that there's a lot of trouble for the banks, especially. So I think they're going to do the 25 basis points. I think that'll give the markets a vote of confidence, sort of like what we saw with the European Central Bank raising rates by 50 basis points. What was it, like a week ago or 2 weeks ago? So I think that'll be a vote of confidence, but the problem is going to be the dot plot, where the markets expect the Fed to cut rates by the end of the year. But in their last projection, they said that they were going to continue to raise rates. So if there's that huge discrepancy between that 5.25 to 5.5% interest rates that they were expecting by the end of the year and what the Fed futures are projecting at 4.25 to 4.5%, that's a 100 basis point difference. That means that interest rates are going to have to go up. That means that the dollar will probably rebound, and that would mean that stocks would likely come down. Good morning, Mike. What does risk on, risk off mean? It's just basically riskier assets will get sold off. So the most risky assets are going to be small cap stocks. The reason being because they don't have access to a lot of capital. They usually don't have a lot of cash on hand. So it's harder for a small company, a small cap, to weather the storm of a recession. How down am I on Chewy? I think Chewy actually made money. Nike, I lost. Let's see. Chewy's actually fallen 4% today. Yesterday it was up 4%, so I'm probably roughly break even. Their earnings is today after hours, so I'm still holding on to that trade. I think that they're going to beat their earnings, beat their revenue, so probably going to hold. But let's see, Chewy, I guess they're down 21, but it's still up $12 for the total return so far. And then Nike, on the other hand, that one I am losing because their stock is holding up. But I'm probably going to hold both of these after the Fed meeting just to see, which one ends up playing out. I would imagine Chewy would probably be the one that gets axed by the federal funds rate going up by the end of the year. Whereas Nike, that trade could end up working in my favor if Nike falls another $8 or, let's see, 8 over 120, another 6%. By the end of the week, that's kind of unlikely, though, I feel like. So hence why these put debit spreads are going for 5 cents a piece. I think they could gain maybe 5 cents up to 10 cents of value, maybe rebounding to like 15 by the end of the day. So probably going to hold on to that. I have 5 of these that I opened at 38. And then for Chewy, I think I opened the same amount, like 5, and I opened for 29 credit each. Or a little bit more, actually. 31 cent credit each. First time here, really enjoying the stream. When do you live stream every day at market open? Yes, every day market open from 9:30 to 10:30 usually. After the Fed, your perspective is still that we still see a drop? Yes, that is currently what I'm projecting, and the reason being that interest rates are going to go much higher by the end of the year. When do I think the Fed will stop raising interest rates? Yes, they would stop raising interest rates by the end of the year in the projection that they're going to go to 5.25 to 5.5%. Currently, they are at 4.75 to 5%, I believe, or 4.5 to 4.75%. Let's see. You can always find this on the CME group. Fed futures. So right now the rate is 4.5 to 4.75%. By the end of the year, they're estimated to go to 5.25 to 5.5%. Right? So that's another 75 basis points worth of hikes from where we're at right now. We're about to get a 25 basis point hike. So what you'll probably get is 25 basis points for the March meeting, 25 basis points for the May meeting, 25 basis points for the June meeting, and then for the rest of the year, they would pause. Unless they expect interest rates to go even higher. So it's 5.5 to 5.75%. Then they would be hiking till July and then pausing from there. So either June or July is when they would stop raising rates. Interest rates go up, gold goes up too? No, it's the opposite. So whenever interest rates are going up, the dollar will go up, which usually ends up in stocks going down. When Powell speaks, is smart to do, calls for VIX since there's a lot of volatility. Well, if he leads the markets up, then VIX will fall very quickly. So not necessarily. Usually what you'll see on the 2 p.m. release, you'll either move up or down. And then when Powell speaks, you'll see the reverse. That's happened like pretty much every single Fed meeting. So basically inverse whatever happens at the 2 p.m. And then usually that trade will end up working out. But last time that did happen, but then it ended up coming back the same way that it started off at 2 p.m. But usually there's a pretty big pivot between the 2 p.m. and then the 2:30 when Powell speaks. If I sell a credit spread $1 wide, my only risk is losing the $100. No risk of getting assigned. You can get assigned early for the short position. Yes, you absolutely can get assigned early for the option that you sell within a spread. But it's pretty easy to take care of that risk. All you have to do in order to take care of that risk is just exercise the option that you bought, and then those trades will balance themselves out. Your broker is going to take care of the cash to where you don't need to put up enough cash to buy or sell 100 shares. Let's see. Gold is slightly up. But yeah, I'm expecting gold to pull back. My guess is down to 178. So based on the last month of trading, it would come back down to where it was, let's see, right before this last kind of rally that I saw. You could also do a call credit spread. That would probably be a safer trade, but then your risk reward ratio is going to be lower for that trade. Let's see, the dollar index is slightly down, but basically trading actually almost at yesterday's highs. So my guess, again, the dollar is going to go up after the Fed meeting. Gold is going to go down with that. SPY is currently down 0.12%, so really not seeing much change in the markets. I would say you could do an iron condor and then close out of it before 2 o'clock. But the implied volatility ahead of the 2 o'clock is going to rise, which makes the options more expensive. So it's probably going to be about the same price at the end of the day at 2 o'clock as it is whenever you sell it right now. So doing an iron condor probably wouldn't work, even with the time decay that comes with that. The time decay is going to be outweighed or basically break even with the Vega and implied volatility. What are my favorite indicators? I don't use very many. I use the 200 moving average. I use RSI, and then I use price levels. That's basically all I use. And then if I'm looking for an earnings play, a very useful tool would be IV percentile. So it just gives you where implied volatility is right now compared to where it's been. So this will tell you whether it's better to go with the spread option or just buy a regular call or regular put. So for example, with Chewy, they're reporting earnings after hours today. If we go to the yearly chart and pull up my IV percentile, IV percentile is currently at 35. So compared to the last year of trading, implied volatility has been higher 65% of the time. It's still elevated compared to, say, the past month, but this could be a decent opportunity to buy calls or buy puts based on previous moves for earnings reports. Let's see. The expected move is $4 in either direction, $4.30, which is this is a $40 stock almost. So that's about a 10% move that's expected in either direction. So if Chewy ends up moving, say, 15 or 20% instead of the 10% that it's expected, then you would get more money out of that, right? If you were to do a regular call or a regular put versus just doing a spread, you would end up capping your max profit for that. Robinhood automatically exercise my short credit spread, freak me out. Yeah, so they're automatic. Usually Robinhood will do it automatically. Most brokers will probably do it automatically, so you don't have to exercise the other option that you buy in a spread if you get assigned early. But always keep in mind, like, just in case the broker forgets to or whatever. You can exercise it yourself. Do I do broken wing SPX butterflies? I've never used broken wing butterflies personally. I've heard of them, but never really used them in practice, so I couldn't really explain them very well. I could pull up, let's see, broken wing butterfly. Butterfly with a spread, long puts. It's not the same distance. Okay, so the way that this works, let me see what the setup is. All right. So what you would do for SPY is what it's saying. Buy a 330 puts, sell two 350 puts, and then buy 360 puts. So you have a lopsided butterfly. So you're either, basically what you're doing here is you're more skewed to one side. So if we set this up, we're not going to set up the exact one, but we could set up something similar, closer to the current price that SPY is at. We'll set it for, let's say, next Friday's expiration, which is the 31st. All right, it's going for 398 right now. So usually with a butterfly, you want to do it, you want to sell the put option or call option at the money, so you get the most amount of extrinsic value out of it, which means that the time decay will kick in a lot sooner. Let's do $5 up, which would be 403, and then let's do $10 down, which would be 388. All right. That's not the same setup. Oh, because you need to edit the ratio. So you need to edit the ratio to sell two of them, and then you're buying two separate ones. So basically this is what it should look like, right? So this trade, I would be more bullish than I am bearish. And as long as SPY is above 392.56, I'll be at a profit. The max profit is when SPY is at 398 by the end of next week, right? So the short strike price is where you want the stock to be, the one that you sell. And then just like a regular butterfly, you'll take your max loss at the options that you buy, the strike prices of the options that you buy. So for this one, it would be 388 would be our max loss point. And then 398, we would still be profitable by $42 based on the $38 of credit that we're getting. So we're putting up, let's see, our max profit is 542 if it's at 543, or sorry, if it's at 398. Max loss is 458 if it's below 386. And then above 403, you still make $41. So basically, it's like an iron butterfly, just skewed to one direction or the other. Yeah, this one is specifically similar to a jade lizard, just based on staying profitable right here, or at least breaking even. That's the way that a jade lizard works out. I think it's just based on the strike price that I chose being so close, though. I think most of the BWB trades are really capturing profit from theta decay. Yeah, broken wing butterfly trades. Right, exactly. So the strike price that's further away is the direction you don't want it to go. And the strike price that's closer to The one that you sell is where the direction you do want it to go, basically. All right, let's get rid of my IV percentile. Not really needed right now. Well, remove studies. There we go. The VIX just seems so dirt cheap trading at 2050 right now. I think I might just buy another 100 shares. Or not 100 shares, but another $100 like I've been. Let's see, UVIXY. Currently trading at 512. Still have an average cost above 7. But gonna do this last dump of $100 into UVIXY. So 19 shares for a total of, is it 460? No, it's 481 now. All right. Buy alert. Just bought 100 of UVIXY. And that is my last purchase of UVIXY for the Fed meeting today. And now I have 480 shares. Hopefully the cost came below 7. I would think that it would. Let's see. SPY. No, UVIXY is the one that we need. 508. So our average cost is 693 now instead of 7. NVIDIA to the moon and back. Yeah. NVIDIA is wild out here. Let's see, Discord. Let me post the update for my total shares and average cost. There we go. Could you just buy UVIXY calls instead of shares? I'm not a huge fan of doing UVIXY calls because it's leverage on leverage. So if you do, I would probably just want to buy regular VIX calls rather than UVIXY. Just because you're going to get basically double the time decay. Yeah, exactly. Leveraging a leverage product. NVIDIA to the moon and back, yeah. Let's see. If we go 25 basis points, will FRC go up? I think FRC would go down. If we get another 25 basis point hike, which is probably going to happen. So that's probably already priced into the stock. So probably not really going to change it by much. Currently, FRC is down by 2.6%. Currently trading at 15.35. But I do think that if the federal funds rate goes higher than expected by the end of the year, that's will probably crash FRC and regional banks. So you could also take a trade for KRE to the downside, currently trading at 46. I would probably say that this is going to stay below like 50. Hasn't been there since, let's see, March 10th, which is when this kind of all started, roughly when it started, actually on the 9th, but then really unfolded on the 10th. So my guess is this is probably going to stay below 50 for the next probably week or two would be my guess, until even if the Fed does backstop all the deposits, I don't think that's really going to help the situation for regional banks because they're not the ones that are getting bailed out. It's the depositors, the people that are putting money in, that are getting bailed out. The banks themselves, the management, and the shareholders, the bondholders, they're all getting wiped out. It could, stop the bank runs to where they wouldn't have these issues, but the unrealized losses from all these banks holding to maturity on long-term bonds is just really horrible, considering that interest rates went from 1.7% for the 10-year to now like 4 point whatever percent it is, or 3.6% right now. So they took the loss on the face value for the bonds, which limits basically how much money that they have in reserves. Is UVIXI the VIX times 3? No, it's times 1.5. But it actually hasn't been performing 1.5 times what the VIX has, which is very strange. Whenever VIX was up, 15% a day last week, I think UVIXI was up like by the same. It was up by 15%. So really, it doesn't have the leverage that it's supposed to for some reason. Not really sure why it lost that leverage or what's causing it, but that's been what's been going on the last couple of weeks. Let's see, the 395, 394. This is a put debit spread that's expiring for tomorrow. So this one I'm probably going to hold into the Fed meeting. This one I would imagine would probably go in the money. Probably right after the 2 p.m. release, just based on how much volatility that we're going to get. So I'll probably close this one today. SPY is currently trading at 398.60, so really not changing much. And that might be what we're going to see all day right before the Fed release at 2 p.m. We might just trade flat until then. So we might just be in a range of like 398 to 399 and not really go anywhere from here. Do I have options trades for smaller accounts? My usual trade is around like $300, but you can scale in depending on how big your account is. Right. So I take on like $300-$400 trades, but I'm using spread options. So for this one, you only need $30 if you just want to trade one of these spreads. So I would say that the strategies that I use are definitely small account friendly, and you could trade along. But you also need level 3 options trading. If you don't have level 3, then you wouldn't be able to trade spreads. All right. Let's check out the Discord, what's going on in here. Yeah, so it's pretty boring morning so far. Oil is only down 0.3%. Gold is only up like 0.1%. So really nothing has changed more than 0.5% this morning, besides the VIX down 3.5%, which with the markets trading flat, that's inevitable that the VIX would go down. Let's check out NVIDIA. NVIDIA is trading at 270 now. Jesus Christ. NVIDIA shares trading higher after the company recent presentation on the GTC conference. Multiple analysts raised their price targets on the stock. Of course they did. TD Cowen raises price target to 300 from 260. A $40 raise on the price target. Oppenheimer went to 300 from 275. Everybody's raising their price target to 300. Oh, this one's actually 305 from 255 from BMO. So that's probably why you're getting this huge pump this morning, is all of these analyst upgrades. My guess is they're just trying to sell off the stock. They need some exit liquidity. And it's basically trading at all-time highs at this point. Absolutely ridiculous, but that's NVIDIA for you. Let's see what Tesla is up to. Tesla is down 0.25%. Wow. Tesla hasn't even moved 1% this morning. That's shocking. It's below 200. My guess it would probably stay below 200 after the Fed meeting, but that's just my best guess. I kind of want to sell some of the shares that I own for Tesla, probably like a 10% stake that I have. Let's see. Fidelity. All right. I've got 28 shares on Fidelity and then another 5 or 6 shares on Robinhood, if I remember right. Tesla. Yeah, I've got 5.5 shares and then 28 shares, so a total of 33. So I'll probably sell down to 30 shares. So another 3 shares that I'll be selling here. I'll sell it on my Fidelity account so I can keep buying QQQX. Because you can't buy QQQX on Robinhood, unfortunately. Three shares of the stock for $600. All right. Just sold 3 shares of Tesla. Still have 30 shares left of it. So still got plenty of it, keeps going up. Do you have any options trade? Let's see. Do you know any way to repeatable price alerts for SPY? Robinhood has repeatable ones. I keep getting an alert every time that SPY goes above or below 398.50. So you could set it on Robinhood and you'll get alerted every single time that it goes above or below a specific price. With Thinkorswim, I don't think that there's anything that you could do there. But if you want text message, emails, I don't think Robinhood does that. They just have the push notifications. Thinkorswim has the text feature to where they'll send the price alerts to you. But it's only a one-time thing, I think. I don't think they have repeatable ones. Let's see. We can try setting up one. So create an alert. at or above X price, notify options. Yeah, so you can only do one direction, at or above or at or below. So there's no way to do it on Thinkorswim. But I know with Robinhood, the way that they have it set up, you'll get a push notification every single time that it crosses the price level. Like every time that SPY goes above or below 398.50, I get an alert for it. Petroleum inventory 10:30 this morning, in about 15 minutes. Let's see if there's any other economic data coming out. Econ calendar. Yeah, you had the crude inventories in 15 minutes. This morning you had the MBA 30-year mortgage rate coming in at 6.5%, down from 6.7%. So that's a decent drop in the 30-year mortgage. So you might see more pickup in demand for mortgages, homes. The last reading was a week ago, and it fell by 0.25%. That's pretty crazy that 30-year mortgage even is that volatile. It went all the way down to 6.18 at one point in February. Probably had a lot of people buying in early February because of that. That small takedown in interest rates usually amplifies the demand. But yeah, not really much economic data besides the 2 o'clock Fed release. So that's what we're going to wait for at the end of the day. All right, the SPY put debit spread is gaining a little bit of value. Still down by 48. Bottom at 36, 8 of them. And I think this one will probably be in the money right after the Fed release. So probably going to sell it then. Let's see the other positions that I have. I think I have a put debit spread expiring in March. And then I have another put debit spread expiring in April and April 21st. Looks like SPX is currently holding the 4,000 mark at 40.34. Well, looks like my Chewy put credit spreads are losing some value. It's down by 5% today. I'm assuming that it's going to stay above 36. So they're down by 27 right now. That's probably just the bid-ask spread eating away at it. Yeah, because they just jumped like 10 cents in 5 minutes. And Chewy really didn't move that much in the last 5 minutes. Microsoft and Nvidia are the ones holding up the market right now. That's what it seems like. Oh, is AMD trading at $100 now? Let's see. It's still at $98. I'm shocked that it's not at $100 with Nvidia going to, what is it, 260, 270 almost? I'm absolutely shocked that AMD isn't $100 at this point. All right. 53% of people are saying today is going to be red, 47% green. on 68 votes and 32 likes. We have half the amount of likes as we do votes. That's just sad. It's also sad that SPY is just trading flat. Understandable. Let's see. Yeah. It's going to be a boring day up until 2 o'clock, in my guess. Gold is actually gaining a little bit of value at 181 right now. Up from yesterday's lows at about 180. Banking crisis ends up sparking a gold frenzy. Analysts expect bullion prices to shatter previous records. You know, it's really funny. What was it? JP Morgan. They had a futures contract for nickel, and it ended up being a bag full of stones that they had instead of actual nickel that they got for a futures contract. I wonder if the same thing is happening for gold or not. If the gold reserves in the futures that they're getting are actually gold or not. I wouldn't be surprised. Like if people are shorting on nickel contracts, gold is a lot more expensive. Let's check. The Chewy contract is losing its value. Up just $3 from, what was it, $20 or $30 earlier. Just going to keep holding this one for after hours in their earnings report. Probably should have went further with my strike price, though, given that FOMC day is today. $2.50 away from the strike price it chose. So 250 over 38. It's only 6%. I think that Chewy could probably move like easily a good 10% if you have a bad earnings plus and the Fed being more hawkish than expected. I think that could really sell things off for Chewy. But I'm also taking the downside for Nike, so we'll see which one outweighs. Nike's trading at 124, and I'm assuming it's going to go to 115. Probably close these two trades at the end of the day at 2 o'clock. What is the difference between call and put butterflies? There's not really much difference between the two of them. You might get a slightly different price depending on if there's more volume or open interest for one side or the other. But for the most part, they pay the same. It's the same exact assumption, so there's not much difference at all. Moderna is testifying from Fox News. Oh boy. Moderna is down 1% today. Oh, gold. It looks like SPY might actually be going up to 400. It's at 399.15. So it broke that 399.03 mark. So we could see 400 by the end of the day. Maybe. Let's see if we have any other news that's coming out. Bernie Sanders probes Moderna over price increases. Oh, man. He wasn't probing them over the billions of dollars that they made after COVID, though. U.S. Senate Committee on Health, Education, and Labor. Yeah, so it's Bernie Sanders is testifying, or they're testifying with Bernie. U.S. Federal Aviation Administration issues safety alert to airlines after several high visible near miss incidents. The FAA. Interesting. Not really news, but there have been some pretty close calls, especially I think with United Airlines have had some close calls on the runway. Senators Booker, Warnock pressed big bank CEOs to pause overdraft fees after the SVB failure. How do you expect them to stay afloat if they can't charge any fees? That's stupid. S&P hits 4,000. Yeah. So there's not really much news coming out today at all. Just waiting on the FOMC at 2 o'clock. Let's check FinTok. FINTOK. This news app is probably one of the better ones. Sometimes I'll get headlines here that I won't see on Thinkorswim. Let's see. Right now it's showing CIFR develop cup and handle daily chart. Not really relevant. Russia's Lavrov says that Britain supplying depleted uranium shells to Ukraine takes the situation to a new dangerous level. So some Russia news. European stocks down 3% to a 5-month low. China MFA spokesperson says China supports an unled investigation into the Nord Stream blast. OPEC likely to stay the course on 2 million barrels per day production. Cuts until the end of 2023 despite the recent price drop. So that means that the price of oil is going to stay pretty stable depending on how bad the recession is. If demand falls faster than the supply is dropping, then the price will come down. But oil is pretty stable today, only down 0.5%, basically trading at that $70 level. Magenta tie means 25 basis points, pretty totally. Yeah, watch for what tie he's wearing. That'll tell you if he's a dove or a hawk. Depleted uranium is armor piercing, if I remember right. Yeah, I'm not really sure about that. North Korea foreign minister official says pressure to give up nuclear weapons means declaration of war. U.S. natural gas extends the losses. So a bunch of geopolitical news from this morning and not really much else going on. QQQ is actually making a new high, currently at 311. So QQQ is leading the way. SPY is lagging behind that. And then IWM is still down 0.3%. I think IWM is probably the snitch here. I think that IWM is probably the right one. That stocks are going to go down from where they're at right now, but we're seeing some divergence between IWM and QQQ as of recently, so it's hard to really come to that conclusion. But yeah, QQQ is at 311. If you look at the last 20 days, I think QQQ is, it's at all-time highs, whereas IWM is trading at the bottom end of the range that it's been in for the last month. So you're seeing a huge discrepancy between the two. Usually these two trade hand in hand, but not now. But yeah, that's probably all I got for y'all until the 2 o'clock meeting. We got, let's see, they also pollute the soil and shouldn't be used anymore. Yeah, there's a lot of shitty things that we do in war that we probably shouldn't, but that's war for you. But yeah, I will catch y'all again at 2 o'clock whenever the Fed comes out with their summary of economic projections and the Fed interest rate decision. Until then, good luck trading, everyone.